This is Marshall Gittler, Head of Investment Research here at FXPRIMUS on Friday, December 11th, bringing you details on the upcoming indicators and economic events. There's nothing big out during the European day today. In the U.S., we start with retail sales for November at 13:30 GMT. Now, retail sales is the most important indicator of consumer spending, which is the biggest part of the economy in the U.S. Now, given that December's Fed meeting is only a few days away, all eyes will be on this important barometer of economic activity. The market's looking for a 0.2% month-on-month rise in the headline figure, which is up from 0.1% in October. Then there's what's called the core retail control figure. This excludes autos, gasoline, and building materials. It's important because that feeds into the GDP accounts. The market's looking for that to be up 0.4% month-on-month, an acceleration from 0.2% month-on-month in October. That would be a pretty good figure and could support the dollar. At the same time, the U.S. also announces its producer price index for November. The last 2 months have seen a drop in PPI due to weaker commodity prices. The final demand PPI is expected to be unchanged from October, a turnaround from minus 0.4% month-on-month in October. On the other hand, a further decline might catch the Fed's eyes. At 1500 GMT, the U of Michigan Consumer Sentiment Index for December will be announced. It's expected to improve to 92.0 from 91.3, which would be good news. Then on Saturday, December 12th, China is going to announce several indicators: retail sales, industrial production, and fixed asset investment, all for November. The data is expected to highlight how the government's efforts to restructure the economy are impacting the economy. Retail sales are expected to rise 11.1% year-on-year. That's a slight acceleration from 11.0% year-on-year in October, while industrial production is expected to languish at only 5.7% year-on-year. That's also a slight improvement from the previous month, which was 5.6%. This data is likely to affect currencies at the opening on Monday, particularly the Aussie dollar. Then early Monday morning Asia time, or 23:50 Sunday GMT, the Bank of Japan releases the Short-Term Economic Survey of Enterprises, known as the tankan, for the fourth quarter. This quarterly report is the biggest economic indicator out of Japan. The market's looking for a small decline in the main large manufacturers diffusion index to 11 from 12 previously, while expecting the outlook for Q1 next year to be 11 as well. That is a stable outlook. People trading the yen should be alert for this indicator. Now, the response in the market isn't always what you'd imagine. Often, if the tankan is better than expected, the Tokyo stock market will go up, and then dollar-yen, which is positively correlated with the stock market, will go up as well. That is, the yen will weaken. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.